Hello, this is Patrick White from AA Commodities and Investments of Spencer, Iowa, with your Monday, August 26th market recap here. As you can see, we've got the corn up about a half a cent here at 368 and a quarter on the December contract. November soybeans were up 10 and 3/4 on the day at 867 and a quarter. December Chicago wheat was down 2.5 cents at 475 and a quarter. Before I get it started off here, I'm going to go ahead and get it started with a disclaimer. Just remember that everything I say is not a direct trade recommendation, anything like that. It's just my opinion. If you'd like to read the full disclaimer, please pause the video now. So as you can see here, we had a pretty, decently mixed day in the markets here. We had corn fractionally higher, soybeans, pretty strongly bid here today, and wheat was lower. Going on into the charts here, looking at December corn on the day, we had the news that was really driving the market. Well, it's kind of twofold, I guess. We had some pretty good rains going across the southern Midwest, across like southern Iowa and Missouri, and then there was some lighter rain across Iowa today. And all that's heading over to Illinois, and then eventually on into the eastern Corn Belt. So really that was the bear side of the story. The bull side of the story was the prospects of a better trade environment with China. They called overnight. The Chinese called the U.S. trade representatives and said they want to start up talks again here for September. And also, the U.S. and Japan, they agreed on some trade practices for their pork and beef imports as well. So, it could be a little bit of an increase of demand here for corn. And I think that's what the chart told us here today as well. So, with that being said, we had just a lightly higher day for the corn market. We tested up into this like 370, 371 area. The high on the day was 371 and a quarter. Could not get a close above there. We ended up closing at 368 and a quarter. So far, we've kept this 363 and 3/4 low intact. That's the contract low that we had last May. And yeah, really just, we've been chopping sideways, especially these last 4 days between basically the 365 to 371 level. I think if we can get a bid back above this 381 level, we'd be good to go on up to test and possibly close this gap at 393. If we can get back above there, up onto $4 and 401. But we haven't had that yet. We haven't really had the bullish catalyst needed. At some point, I do think that they're going to bid up corn just for the idea of a yield cut in the WASDE here on September 12th. I think that's a yield cut for corn is warranted. And I think that corn acres and stuff too could be cut as well down the road here. So I think at some point we're going to try and find a bottom. And seasonally, this is also when we try and find a bottom here as well, getting on into either late August or late September is typically when we kind of create a fall low for corn. So, something to watch there. Seeing some sideways, semi-supportive type of action. I don't see a turnaround yet, but, just kind of a wait and see on the corn market there. Soybeans had some really, really positive price action today. We pretty much reversed everything we lost last Friday. We were down 12 on Friday. We were up 10 and 3/4 today. In the soybean market, I guess, on the overnight on Sunday night, I had, this 865 to 867 level pegged. Well, really, it was the 870 level today was where the battle was. Traders went up and tested 870 on the overnight, and we started selling off from that at 830, and then they went up again and tested 870 and fell off of there again towards the close. So I think 870 is where your battle is definitely at. And we closed at the 65 level, 867 or so. 870 is where your battle is. If we can break above that, we're probably headed back up to this 880 mark, 878 to 880. And, but if we do break down, we're probably headed down to these, 861, 855 lows. As you can see here, like this low mark here, down at the 855 level, that's a low that we saw on August 5th, and that's what guys have been trying to bottom pick, basically. So still in a downtrend for soybeans, still, cautiously optimistic. The story was that the U.S. and China are going to go back to the trade talks, here in September. Obviously nothing final, but, the traders are taking that, the talks and stuff pretty seriously. We'll see how they digest that here the rest of the week. Typically, they've rallied it one day and then sold it off, but we'll see there. On the wheat market here, we tested higher into like the low 480s. We had a high today of 481 and a quarter, tested that. World prices have been increasing here a little bit. They've just seen some short covering. Chicago wheat, I thought we were going to see a 483 mark, 480 to 485 possibly before we did this, before we found resistance. But, with that being said, that 483, 485 could definitely be tested. I think if we get I would be a seller there. If we get above there, I think we could get a test up to 495, $5. And I think if we break above that, then I'll be a bull. But for right now, we're just continuing our downward channel here, our downward slide. So going on into the cotton market here, the softs, opened up lower with a gap down lower last night. Forecasts for the western Texas and the Texas Panhandle have been for increased moisture, and they've gotten some pretty good rains, 1 to 3 inches here these last 3-4 days, and they're expected to get more rain as we go forward here. And so just the weather threat is not as threatening, and so that's why we've seen this decent slide. What you saw, I guess, we had a low today. We had a low today at 56.59, ended up closing at 57.82. I guess I've got this support level at 57.75 or so, 57.80. We came off those lows pretty good just on the China news that came out. We opened lower, and we're much lower here to start the day. But yeah, just with the China news, and things like that, just the more optimism for the exports. That's why we didn't close near the lows here. So I think we've got definitely we've got some support in here at the 57.75 region. That's definitely what this day shows us. We've also got another factoid of support there, another data point, if you will, of support there at the 56.50 level. So I think if we do break out of this 58 to 57.75 region, we're probably headed down to 56.50, probably down to the 56 mark to test that out. But we'll see. Hopefully cotton can hold the range in here. Certainly does not look good. This looks like we could see another round of selling down to that 56 mark and make another range. So, and if you notice, that's what basically this market's been doing since after the slide down this last May. Going on into livestock, probably my favorite chart of the day here, really, on live cattle. Just had the announcement of the Japanese, in Japan and the U.S. agreeing on trade practices for hog and pork exports, and really just had the market gapping up here to start the day. We closed $1.60 higher at 101. That's also our support, or our resistance level. Excuse me. Our resistance level is at the 101 mark. I think if we break higher here, we could definitely test this old 103.42, 103.50 mark. And if you'll notice, right at that level, that's where our lows came in late May to mid-June there. So, we're kind of at a pivotal point here. We've tested this level. This would be the third time. So I think if we are able to break above it, I think we're headed up to 103.50 to give that a test. With that being said, though, if we do sell off, we're probably going to stay inside the range here between 101 and 98. So another one of my favorites here, hogs. Pretty interesting price action here. We had a $3 limit day down here today, and then we had a $4.50 extended limit run higher today. So on Friday we saw that gap down below the 61.50 or $62 support zone there, and sold off. Today we reversed that all the way back up, and they went back inside of the range. So our support now is at the $62 mark, and then I think I pegged resistance at like 65. There's light resistance there. Obviously, the top of the channel here is at 68.70. And just the news of both the Japanese trade resolution, if you will, and then the China news, the positive China news here. We've got traders are really just bidding up hogs in the hope of better exports here down the road. And markets rally on anticipation. They really don't rally on facts. They rally on anticipation. What are traders anticipating right now? Well, they're anticipating that sometime down the road here, hogs are going to get have better exports and be able to have some offtake of these higher supplies that we've been seeing. The U.S. has an oversupply of pork, and the Chinese, eventually down the road, they're going to run out of pork, and it's really going to cost them if they can't find a good supplier. And right now, it looks like the U.S. is the only major supplier that hasn't been hit with African swine fever. So that's all I got here today. If you guys have any questions, feel free to give me a call at 712-262-7606, or go ahead and give me a call at 712-262-7606 to talk markets. Sounds good. Have a great day. Thanks.